Thank you, Morgan. RJ, you heard what Morgan had to say there about your Q4 results. Better than expected, but I think the guidance is something that a lot of people are going to have questions about. You're expecting to deliver between 46 and 51,000 vehicles. I mean, last year you delivered more than 51,000. Why the slight decline in 25?
Yeah, we've tried to capture our expectations around trade policy, consumer-facing tax credits, and incentives for purchasing electric vehicles into a comprehensive view of what we're providing for guidance for 2025. And as you've seen in what we put out in our quarterly report, we have a range that we provided. There's a lot of unknowns still in the system, and we're certainly building the resilience to respond to whatever ultimately happens in terms of trade policy and consumer credits.
What are you more concerned about as a CEO right now of an electric vehicle company? Are you more concerned with EV incentives, especially the manufacturing credit going away, or are you more concerned about the potential impact of tariffs?
Well, both ultimately have very similar effects. As we look at the automotive supply chain, there's a lot of content, especially as you think beyond just the tier 1 supply base, but into the tier 2 and tier 3 suppliers. A lot of those suppliers exist outside the United States. A number of them, given the multi-decade run for NAFTA, exist in either Mexico or in Canada. And so the impact of large tariffs on those is going to ultimately translate to higher costs for us, which translate into pricing. And in a similar way, as we think about consumer-facing tax credits, it effectively makes the vehicles more affordable for consumers. And so in both cases, they ultimately are going to impact demand, and they're ultimately going to impact the rate at which consumers shift towards electrification.
RJ, it's Morgan. I just want to dig into that a little bit more deeply, and that is right now you sell your vehicles into the U.S. market, into Canada. I was reading that you have plans to sell into Europe as soon as next year. When you do look at something like trade policy, for example, how do you game that out in terms of a demand picture as you do expand into other markets more meaningfully?
Yeah. So we're launching our R2 product in the early part of next year, and I've never been as excited as I am for R2 as for any product. It's the combination of performance, capabilities, attributes is just incredible. But what makes it so unique is, for us, is it represents really the first mass market product in terms of pricing, and that's enabled through a really heavy focus on cost efficiency and how it's designed, and importantly, the supply chain that we've sourced for this product. And what we've talked about publicly is the bill of material cost in R2 is expected to be about half of what it is in R1, and the non-bill of material COGS will be well under half of what we have in R1. So it really enables us to have a much lower priced product. And that, of course, builds in, or enables, I should say, more resiliency to some of the changes that we could potentially see here.
Hey, RJ, it's John. Last quarter on the call, you guys said your lease penetration was 42%. How does it look for the quarter you're reporting now, and how does this environment with the consumer being in the state the consumer is in and the uncertainty around these credits affect that leasing customer?
There's certainly a lot of uncertainty, and the things we can control today are continuing to focus on driving cost efficiency in our plant, continuing to improve the product with every software update that comes out roughly once a month, so we see the product getting better and better and better, and then of course our focus on R2. The split between leasing and purchase is something that I would say we're not overly concerned with. We see that moving around. It's going to depend a lot on what happens in terms of tax credits and the overall approach to some of the previous policies that were in place.
RJ, I know you're going to begin R2 production in central Illinois next year, but ultimately, has your outlook in terms of when you look into the future, has your game plan changed at all in terms of ultimately opening up a manufacturing plant in Georgia?
No, and in fact, we get asked this question a lot around, how we think about electrification on long term. Our perspective is identical today as it was years ago, and that is that the entirety of the automotive world is going to convert to electric. The rate at which that happens is really dependent upon how quickly we as an industry can create lots of choice, lots of options for consumers. You know, and in today's market, particularly in the United States, there's very few highly compelling choices. It's one of the reasons I'm so excited about R2 is that the market needs a highly compelling choice, highly compelling options. And with that, we do see significant demand. There's a tremendous amount of excitement for R2 and R3. And our Georgia facility has been architected and designed to support building all of those vehicles, the R2 vehicles and their variants, and the R3 vehicle platform and their variants.